Hello, ladies and gentlemen. Welcome back to Reserved Investments. Today, I present to you a conversation about investing in numismatics and also a warning about fractional share investing in the antiques and collectibles trade. Now, I'm assuming I'm doing this video correctly. You should be able to see my screen. You should be able to hear my voice. But unfortunately, for the purposes of this video, you won't be able to see my lovely face. I assure you I'll be back on camera soon. The reason why I'm doing this video using screen capture technology is it allows me to explain the subject matter much better than I have been before. Now, I have done previous videos on fractional share investing as it relates to the antiques and collectibles trade. And I'm still getting questions on this. If you don't know what fractional share investing is, this video is for you. There are three main sites right now that cater to fractional share investing in the antiques and collectibles trade. One such example is the site known as Collectible, as seen here. I'll let you guys, if you want to explore this site, be my guest. It's www.collectible.com. Just remember, collectible in this case, it's spelled with an A instead of an I. So just keep that in mind if you're going to follow along. We also have Rally, also known as Rally Road. This is another site that caters to fractional share investing in the antiques and collectibles trade. The third site is Masterworks.io, and this is the original OG. Masterworks really helped pioneer fractional share investing in the antiques and collectibles trade by offering users or investors the ability to buy shares of high-end pieces of art. Now, I want to be very clear. This is not a glowing endorsement of these companies. As a matter of fact, as a consultant, as an investor, as an expert in the antiques and collectibles trade myself, I would tell you to avoid these sites at all costs. And we're going to get to why in a minute here. Lo and behold, though, the reason why I really am doing this video is because I cannot believe that somebody known as Kagin, who has a lot of credibility in the antiques and collectibles trade from the standpoint of offering rare coins and currency, they actually have a digital division that is now experimenting with fractional trade investing in a lot of these relics. And I really want to comment now on this article that premiered in Numismatic News entitled Shares All Sold of One of a King Bank Note NFT. And that is a very interesting headline. Shares all sold of one of a king, not one of a kind, one of a king, banknote NFT. So we are going to explore this because I'm kind of flabbergasted that coin and currency collectors bought into this, but I really don't think the people that did invest in this were coin and currency collectors per se. I think that these were digital asset investors who pretty much came from the NFT, the crypto world. They saw this, they pounced due to the rarity, due to the uniqueness of this situation. So I am going to read through this article. We're going to go through this, and I'm going to give you my thoughts and why I caution people from engaging in any type of fractional share investing in the overall antiques and collectibles trade. So here we go. This is really going to set this up for you. It's going to describe exactly what took place. As of June 9th, all 500 fractional shares of the unique 1934 $100,000 U.S. gold certificate specimen have been sold. Launched on April 10th by Kagin's Digital, more than 70 individual buyers, including collectors, investors, and dealers, participated in the offering, with several acquiring multiple shares. Okay, so this makes more sense. There were 500 fractional shares to own this item available, and 70 investors pretty much took part in this. So most of them bought, obviously, more than one share. Shares were offered in three pricing tiers. The first 100 were at $1,000 each. The next 100 were at $1,150 each. And the remaining 300 shares were listed at $1,250 each. Now remember, these all sold out. So all the shares that were readily available for this item already sold out. Now here's a history of the item and why this is so historic. The 1934 $100,000 gold certificate specimen is the only example of its kind available to private owners. It represents the highest denomination of U.S. currency ever printed. Originally created to transfer large sums between and among Federal Reserve banks, the 1934 $100,000 gold certificate was never circulated publicly. Today, the remaining gold certificates are housed in government museums, but only a single specimen remains in private hands. Recently graded Choice Uncirculated 63 by PMG and now designated with its own Friedberg number, the note had not been available on the market for over 2 decades. If you don't know what a Friedberg number is, it's basically a cataloging system that pretty much documents every single U.S. piece of large and small size currency in existence, meaning all federal issues. So it's a very fascinating catalog system. I did mention this in the video I did on collecting and investing in large size paper money. If you want to check out that video, I go further in depth into that catalog system. So let's continue here. The offering marks a technological milestone in the numismatic world, demonstrating how NFTs are the ideal application for the fractional ownership of real-world assets. The blockchain delivers the necessary security and transparency for a shared ownership model, and the Web3 user experience combines frictionless transactions with regulatory compliance to offer a better solution to a broader audience of investors and collectors. And this is really why I think it's mainly the crypto bros, it's mainly the NFT boys and girls that are investing in this. I can honestly state that I am a hardcore rare coin collector, and I talk to a lot of people in the business, and I can't see any of my mentors or the people I do business with buying into something like this. Now, it could be that I'm wrong. Maybe some of them, out of curiosity, they said, you know what, I can probably get a share of this. What were the prices again? I think the low end was like $1,000 a piece or $1,100. Maybe I'll throw $1,100 at this and just see what happens. But for the most part, I really can't see too many hardcore coin and currency collectors going at this because, again, you're really not buying into anything. It's more of owning a digital asset than the real thing. So back to the article. We were amazed at how enthusiastically and quickly individuals embrace this new way of owning an iconic numismatic treasure, said Donald H. Kagin, president of Kagin's Digital. The strong response confirmed our belief. Collectors want access, investors see the value, and dealers recognize that this is a concept whose time has come. Shareholders will receive a tangible gift commemorating their digital ownership, a lucite embedded replica of the note representing their participation in this historic offering. That's great. You get a little trinket to say that, hey, I have a fractional share ownership of this item that I can't really sell, and I have to pay management fees because I was dumb enough to invest in something I don't own physically. So you can tell that my opinion of this is very negative overall. The note was on display at the Summer Fun Show in Orlando from July 10th to 11th and will be at the ANA, American Numismatic Association, World's Fair of Money in Oklahoma City from August 19th to the 23rd. Now, this is where we have to have a candid discussion because, believe it or not, this isn't the first time that Wall Street or the antiques and collectibles trade have experimented with fractional ownership. If you've done any of the studying that I've told you to do on this channel about the graded coin bubble that took place in the 1980s, you will come across a lot of articles, a lot of interesting news stories about what happened with the Merrill Lynch Athena Fund. If you don't know what the Merrill Lynch Athena Fund is, I talk about it in a lot of my earlier videos. This was where Merrill Lynch decided that Wall Street should get involved with specifically the rare coin marketplace and allow Main Street investors to pretty much own fractional shares of rare coins, art, and antiques. And this took place in the mid to late 1980s all the way up through the 1990s when the bubble fizzled, when a lot of losses were mounting and, of course, lawsuits were filed. So this did not work back in the 1980s and 90s. Now, before I go any further, I want to make things very clear here. I am by no means telling you that this is a scam. As a matter of fact, Kagin's itself, they're a very reputable company. So is Masterworks, so is Rally Road, so is Collectible. So why are we having this conversation? Because what you are doing when you are investing in an item like this, in a fractional share of this rare, valuable collectible, you are taking an item that is already illiquid and you are adding more illiquidity to it, plus you're also adding a layer of management fees that you do not control but you have to pay, and also, most likely, depending on the site, fees if you choose to sell your shares on the open market, assuming there is a buyer. Now, that doesn't mean you cannot make money in this, but in my humble opinion, to sum this whole video up, you would be better off buying a $5,000 collectible that you control, that you take ownership of, that you can sell whenever you want or do with whatever you want, than owning $10,000 of a collectible that you just own fractional shares of, if that makes sense. I often on this channel talk about how before you invest in the antiques and collectibles trade, you should be financially established, meaning you should have assets in a brokerage account, you should be invested in ETFs, mutual funds, whatever. That works because that is geared towards share investing. For instance, if you're going to invest in a Vanguard S&P 500 Index ETF, symbol VOO, you're obviously going to buy it by the share on the open market. Wall Street financial assets are meant to be sold by the share. Collectibles, antiques are meant to be sold by the collectible itself. This is a very interesting story. It's going to be very, very interesting to see where this goes in the future. I will be watching this. I will also note and comment should a significant price increase take place in this market, meaning this particular $100,000 note, if it does happen to be sold and the shareholders are rewarded, meaning they made money significantly on this particular item, I will gladly report on it. I don't have a bias in this race. What I am telling you, though, just if you look at the history of the antiques and collectibles trade, fractional share investing in these markets is inherently risky, and you would be better off, to sum up the whole point of this video, going to the market, buying what you can afford, taking full ownership and risk of that item, putting it away. That way you can sell it whenever the time is right, or you can keep it forever. You can pass it down to your kids, grandkids, nieces, nephews, whatever, rather than parking a significant amount of money in fractional shares devoted to the antiques and collectibles trade. This is inherently risky. It is a nightmare. If you want me to do an even deep dive on this, we can go further where I can read you one of the contracts on one of these sites and explain to you specifically the hardcore risks, the lack of liquidity, the management fees, and the other fees that you're not privy to before you plunk down your hard-earned money. If that's a video that you would like to see me do, I gladly will. Thank you for watching. Let me know your thoughts in the comment section below. Would you be willing to invest through fractional shares in any of these items, whether it's a sports card, a video game, a rare coin, this $100,000 banknote, a piece of art, whatever it is? Because if that is you, I honestly wonder if, thanks to cryptocurrency, thanks to NFTs, you guys are getting a little bit too comfortable here owning digital assets that have no underlying cash flows. If you're going to invest in assets to become financially established, you want to put your money in assets that have underlying cash flows. Think financial investments and or real estate. Thank you for watching. I will see you in the next video.